Hi everyone, I'm very excited to bring you some high time frame Elliott Wave analysis that will hopefully help you with your long-term plan in Bitcoin. Let's start with the first scenario that I have, and the first two scenarios that I'm going to show you are going to be more unlikely, like these are unlikely scenarios. And then I want to go into three scenarios that for me feel more likely. I just don't know yet which of these scenarios will play out because we don't yet have the information. So let's start with the, for me, unlikely scenario, and that is this one. Now, the end of the, let's say, previous bear market over here in 2018-19 ended around December over here, December 2018, January 2019. And then in my opinion, this is a wave 1, 2, 3, 4, 5. However, with this count, we're basically saying, no, this is not a wave 4 and this is not the wave 5. It's something like a 1, 2, maybe a 3, 4, 5. And then this is an A, a 3 wave, A to the downside. Then a 3 wave move to the upside, followed by a then 5 wave move to the downside. So that's how we get to an A, a B, and a C, and it's basically a 3 wave, 3 wave, 5 wave. Now there's two reasons for me that this is quite unlikely. First of all, as mentioned, I think this is not the right 5 wave count, honestly. I think it suits much better in time, and also the relationship between a wave 2 and a wave 4 in this case work a lot better if the count is like this. So this is then a 1, 2, bullish 3, 4, 5. And then this is the first bit of the correction basically. So that's one. The second one is that I think wave C is very out of proportion compared to wave A and wave B. So with Elliott waves, the waves have a certain relationship to one another. In this case, wave A as well as wave B, time-wise, with this scenario, right? So if this scenario is a wave A and this is a wave B, then if we look at time, they don't differ too much from one another. So if we take the FIB time tool, which is actually an important tool in Elliott waves, we put it from the beginning of A, which is the high at 64.5K. We move to the low of A over here, and then we double tap. We just double click over here. You see that the length of A, the 1-to-1 of the length of A is over here. So still wave B is quite a bit longer actually. It's even longer than the 1.618, so it's probably going to be around 2, I guess. Yeah, so it's about twice the length. So wave B in this case is about twice the length of wave A. Okay, that's fine, right? That can happen. That's absolutely no problem. However, just look at the size of this wave C, and then you can imagine, yeah, compared to this being a wave A, this being a wave B, and then expecting this to be a 5 wave C, not so much. Of course, this would be really bullish actually. I mean, short term, we still then expect a movement to the downside, but after this, the bear market would be finished and we would expect new all-time highs to come. So this scenario for me, for all the bulls out there, I'm sorry, but for me, it is very unlikely that this is going to happen. And that's why I actually called it Elliott Wave High Time Frame Unlikely. The second scenario I have is the following one, which is I suppose, short term. And with short term, we're talking about months here. It's going to be a short term, or maybe even a year, bullish scenario. So this second scenario basically means that the impulse that we have works. So it's a 1, 2, 3, 4, 5. So wave 5 is over here. And from that moment onwards, from the all-time high that we have at 69K, we move down in 5 waves. This being wave 1, 2, 3, 4, and then some sort of a weird 5 here more locally. Now, of course, and you've probably seen that in other videos, and I will say the same, it's very difficult to count 5 waves in this structure. That it would have been something like an A, or a wave 1, maybe then wave 2 over here, then a 3, 4, 5, because actually this low over here took the lows of this low, and wave 5 has to go below wave 3, right? So that would be my local idea of then a 5 wave structure. But even if you look at this structure, it looks very much like a three wave, right? But okay, we're not talking about debunking this scenario just yet. Let's first talk about the idea that we have, right? So over here on the right side, you actually see a fib time. And this is the 1-to-1 fib time that is pulled from the low over here to the all-time high that we have. And the 1-to-1 basically means that the correction that we're gonna have is gonna take the same amount of time as the bull run that we had. Now, very often corrections tend to at least correct the same amount of time as the move up. So in this case, the move up and then the move down, like the bear market ending around the 1-to-1. However, if this is a potential wave 1, 2, and then 3, 4, 5 further upwards on the higher time frame, and I will do a future video about that. If this is a wave 2, then wave 2 can surely finish before the 1-to-1. I've seen them finish around even the 382 fib time, 0.5 fib time, the 0.618 fib time, different fib times. But I just put the 1-on-1 on my chart because it's always a good reference point. Now in this case, as mentioned, we have 5 waves to the downside, followed then by an ABC correction, and then we would expect another 5 waves to the downside. So basically this is a very big zigzag move, as we like to call this type of correction. And then this move that we have done now, the 5 waves that are over here, will be a wave A, followed then by a wave B that is not allowed to take these lows. The moment we take these lows over here, this whole scenario is invalidated. So wave B should end up, I don't know, somewhere here, let's say, and then eventually we go and move up to wave C to finish wave C. And wave C in a zigzag very often ends in between the 618. Let me actually put the fibs over here. So very often ends between the 618 and the 786. By the way, make sure if you're going to put these counts on your own chart, put everything on log scale. So you see I have log scale over here, as well as the Fibonacci and trend. So the Fibonacci should be on fib level based on log chart. Tap this button over here, as well as these. What is that? The trend-based fib extension. You have to do the same, okay? Just to make sure that if you implement this on your chart, make sure to do it correct. So ABC to the upside, and then another move to the downside. And I estimated the 1-to-1 over here. Of course, we don't know how high this wave B is going to be. I just put it just below the 786 for now, taking these highs of wave 2, before then a move to the downside, which would see us go to about 11K. So this is another scenario that I have in mind, but in my opinion, it just feels more unlikely. And the reason for this being more unlikely is because of this weird structure of a wave 5, which very much looks like a, well, 3-wave structure. Okay, next scenario. And this is the first scenario where I think, hey, this is a likely scenario, but we just don't have enough information just yet. So this is the first scenario for me that is actually quite interesting. So over here, what you see, the yellow fib times are from the high of this wave A, because this now becomes a wave A, as you can see. Wait, let's first zoom out a little bit. So what it basically means is this is an A, then we have a B, and then we have a C wave. So it's a zigzag A, an expanding flat B, followed by whatever it is, C. Very likely a zigzag or whatnot, but at least some sort of a C. Can also be an ending diagonal, also possible. So that is what I have on my chart right now. That also means that the all-time high is wave 5, right? So this is again 3, 4, 5. So then when we look at this scenario, we can see the following. You see over here a trend-based fib extension in yellow. And that is the extension of this being a wave A, this being a wave B, and then this being a wave C. Wave C is very likely to end up between the 1-to-1 and the 1.618 fib trend-based fib extension. So this being an A, B, C, this means for wave A, this is a valid target, or at least for wave C, because this is an A, B, C, and then wave C of my blue line over here, this is a valid target. So this is all good, this is correct. Then we move to this structure. The only problem now is the fact that locally, we need to get higher. So if this is then a 3-wave structure, we are now at the 236. So if I actually open the two, or if I put the 236 on my chart here, you can see that this retracement compared to wave A, so compared to basically, you pull this fib, these white lines, you pull the Fibonacci retracement from the all-time high to the end of wave A, and then put it on fibs, on log scale, of course, and then toggle on the 236, 302, and 0.5. The problem with this at the moment where we are now is that we are not high enough. A wave B, the minimum requirement for a wave B is to reach the 382, and as you can see, we are still far away from the 382. So when I was thinking about not only this scenario but some other scenarios that I will show you in a second, I thought, well, if we're not high enough, is there a possibility that wave 5, that wave C, is not yet finished? And yes, there is a scenario where wave 4 on the local time frame, or well, local, this wave 4, we're talking about this part now, that it is not finished yet, that we still have more upside to go to reach that 382, which we have nice confluence here with the range as well as basically a nice amount of confluence with this whole resistance, well, support resistance flip, you could say, because we never backtested. We never backtested this area. So much support over here as well over time, and then we had a range here, but we never actually backtested it before going down. So this would also be a very nice backtesting scenario where you could basically trade a support resistance flip. So I will talk more about why this wave 4 might not be over yet with a scenario that I'm yet gonna explain after this one. So I'm not going into this just yet, but just know that in my opinion, and following the Elliott Wave rules over here, a wave B needs to reach at least the 382. We're not there yet. So if we move down right now, for me this scenario becomes very, very unlikely, because I want to see the 382 hit, or at least we need to get closer to the 382 before, in my opinion, this scenario becomes likely. Then what I've done is I've put a bit of a target for wave C. Now you can see a support resistance flip over here, which is the old all-time high here around like 13, 14K, which is also some support on these peaks. And it has confluence with the 0618, which is the lowest target for wave C if this is a zigzag, meaning like a 3, 3, 3, then this is a very valid target. The 1-to-1 is more common, but the 0.618 works. The 1-to-1 is about 7K or something, but this one works with the support resistance flip, and that's why I have it on my chart. And currently I put the height of wave B, because how you pull the 0.618, let me actually open the trend line. So how you pull it is from the all-time high, you're pulling it to the low of A, and then to the expected high of C. And I just put it on the 382, as you can see here. I just put it on the 382 fib, and then it gives me the 0.618 right here at about 12.7, 12.8K. Okay, scenario finished. So this is another scenario which will be, by the way, invalidated the moment we take this low, and we didn't yet reach the 382. In my opinion, at least, it becomes like invalidated, or at least very unlikely. So, next scenario. Still, this scenario, by the way, is likely, because of course we're still far away from the lows, and we possibly have still some upside to go, which I would like. That would be my favorite. I would love to see some upside, and I also have a very nice target box over here. So yeah, I would love some more upside. Let's go into this scenario. So in this case, wave 4 is finished. So my last scenario, I'm making you wait, hey guys. My last scenario will explain why this wave 4 might not yet be finished. But let's first talk about this scenario. Now this scenario, is it likely? Yes. I mean, of course, I would like wave like C in this case to go a little bit higher. It just works better. But hey, if that's not the case and this is the high of 4, fine, you know, and then possibly going to a wave 5. But now I'm already going too quick. Let's just see first what we have. First of all, the high, the all-time high is wave 5. So again, this is 1, 2, 3, 4, 5. This is the all-time high, and then this is the basically beginning of the correction. And actually that makes me think that with the previous scenario, I gotta quickly say this, that if this is an A, B, C, then on paper we have had 3 waves and we could see a new bull run all the way to new all-time highs. Or, so either this is the end of the bear market and we go all the way up, or this is only wave A, so a 3-wave A, followed by a 3-wave B, and then more downside in C. So, but that's very, very, very long term. So, okay, just for you to know. Okay, here we go. So, in this scenario, we are counting 5 waves down. And that would be wave 1, 2, 3, 4. Wait, that's wrong. It's actually too messy on my chart now. Let me remove the channel. I'll get into the channel later. So, in this case, we have wave 1, 2, 3, 4. That is finished. In this scenario, 5. So in this case, we are in an impulsive move to the downside, 5 waves to the downside. And if we look at the target of a wave 5, I've put them on the chart here for you. Again, make sure to use your lock, put them on lock setting, fib levels based on lock scale. First, the wave 5, if we then move down in an impulsive wave, can end in between the 1.236 and the 1.618, which is basically below these lows, so below 15.5k to 14k. However, this is the 1-to-1. This is basically wave 1. So the high of wave 1 to the low of wave 1, and then put that on top of the high of wave 4 with a trend-based fib extension. And then you get this target, which is at 12k. And then the final target is taking a trend-based fib extension from the high, all-time high, to the low of 3, to the high of 4, and then put on the 0.618, and that will give you a target of 10.8k. So all of these 3 targets are valid for a potential low of a wave 5. Now the thing is that if this is indeed a wave 5, then the correction needs to do this. Because if this is the all-time high after 5 waves, we cannot finish a bear market like this, because this is an impulsive wave. An impulsive wave is always followed by a wave up and another impulsive wave down, another 5-wave structure. It's always a 5, 3, 5, a zigzag, or it's a 1, 2, 3, 4, 5. So in this case, this whole move, these 5 waves, then probably, likely, are going to be like an A. So it's going to be an A. Then we have to move up in 3 waves for a B, and then down again for a C. So this will be a long bear market. Well, actually, probably people won't experience it for like a very long period of time because you have this massive bull market in the meantime. However, it will not lead to new all-time highs because we will drop again to even lower levels than these, lower than the low of 5 made here, because that is the requirement in a zigzag. If this is A, this is B, then C has to go below the low of A. That being said, this is another scenario I will put on the channel now that I just removed, because the channel can also give an indication in targets. And then if from here we would move down, you can basically see the confluence of the different regions with the low of the chart, the channel, because the channel is pulled from 2 to 4 to the low of 1, and then the low of the channel in this case can give valid targets for a wave 5. And as you can see, the channel goes down very, very steep. So if we want to move down, we have to do it pretty quickly because time is running out, and then maybe we would go even below all these targets, which is of course very rare. So that being said, this is a potential scenario, but in my opinion, it is not as good as, so this is still a more preferred scenario in my opinion. So this, I like this one better than I like this one. Okay, and then the final one, where I will also explain why I think wave 4 might not be finished, is this one. Yeah, try to make sense, eh? So it's a messy chart. It's a messy chart, but I'll make sure to go through the chart step by step. So let's at least start with okay, cleaning up. Now I'm gonna zoom in anyway, so I'm not gonna clean up the what you see. But so again, the all-time high is the high of wave 5, right? 1, 2, 3, and then 4, 5. And then we have 5 waves to the downside. 1, 2, 3, 4, but then 4 is higher, which I will tell you in a second. So this wave 4, this ABC that we're in with the impulsive structure that we're in right now, right, is not yet finished. So we still have higher prices to come. And then after wave 4, we go to wave 5, which of course is to the downside. And then the same scenario applies on the very high time frame, that this is then still an A, B, C, right? Because you can't finish a correction like this with only 5 waves. You need at least a 3 wave, like a 5-3-5. That being said, let's go into the more local time frame. So I'll jump into the 4 hour and explain to you what I think might be the case. Okay, so you've seen me talking about this ABC the past few days with the videos that I've been making. And everywhere on the internet, because I also follow other Elliott Waves, let's say, I see everyone talking about, first of all, this being the end of wave C. And I also see people talking about not being able to make any sense of what is actually happening over here. And I also struggle a little bit with what is actually, and I actually told you in this video today, like, because I struggle with this bit over here, I just only basically did my Elliott Wave analysis on the final bit because it made more sense, let's say. However, this made me think, because if this is the end of a wave C, then compared, like if I take into account this scenario as well as the other more likely scenarios, we should start with an impulse. We should just, after this peak, see a 1, 2, 3, 4, 5 to the downside. This is then a wave 1, and then we have 2, 3, 4, 5, bam. However, that's not happening. Why? It's not happening because after this high of 5 over here, we took that high once more, which is something that it just doesn't work. And also, if this is the wave 2, and this would be like the wave 4 before then this being, so if you put wave 5 from here to here, wait, this might be, let me go to the lower time frame because I don't want to confuse anyone with all the abracadabra. So if this is then wave, let's say 1, 2, and then we have 3, 4, 5, right? And let's put it on, there we go. So this is what currently many people think. Wave 5 ends here. And then the question is, what the hell is happening in this area? No one knows, you know, no one understands. And I also don't really get this part. So that's why I basically analyzed this part with a bullish and a bearish scenario. But what you can not do, because it doesn't work really, is put wave 5 here. Even though this high is higher, this high took that high, it doesn't work with the proportions, because Elliott Wave is also about the rule of alternation, which means that, you know, wave 2 and wave 4 tends to be similar. Wave 2 tends to be shorter than wave 4, but not like this. Like if this, you know, that doesn't work. And if you put wave 4 down here, then wave 5 should be in 5 waves. But is this then 1, 2, 3? Like how can we count 5 waves here? Is this maybe a 1, then a 2, then a 3, 4, 5? Like very, very, very confusing, very difficult. So I was thinking, well, based on the information that we have here and the confusion, wave 4 might not be finished. So I started to look into other things happening here on the more local time frame. And this is why I think wave 4 might not be finished. So something that I haven't really heard anyone talk about is the fact that wave 1, like the length of wave 2 in time, can be equal or can be quite close to the length of wave 4, even though wave 4 tends to be the longer wave in time compared to wave 2. However, wave 4 has a very strong relationship with its impulsive wave, being wave 3. So the longer wave 3 is in time, the longer wave 4 will be in time. And that is exactly this fib time that you see over here. Let me put on the trend line. So what you see right now is I put a fib time from the low of wave 2 to the high of wave 3 where you double click. And then the 1-to-1, so the length of this wave is the same length in time as this, exactly the same. So the 1-to-1 is here, and the wave 4 tends to be longer than the 1-to-1 of its impulse wave, which is wave 3. However, we're not even close to the 1-to-1. We're here now at the 23rd of Feb. The people, and including myself a few days ago, talking about the wave 5 being here was on the 16th of Feb, even though the 1-to-1 is on the 3rd of March. It's on the 3rd of March. That's in, I don't know, like 1.5 weeks basically. So I was thinking, okay, well, that's actually really interesting, because then this might be an A. This can be some sort of a B wave followed by a C wave, and then we have the final move to the upside. And the reason that this would work also with the other ABC scenario is that if that is the case, we then also reach the at least rare target of wave C, if not the common target of a wave C, which I would like the most, because this is also the 382 area. This is the support resistance flip. Everything around 30K is mega interesting. So we could still reach those higher levels. And if we look at, okay, how valid is this? Well, first of all, wave A is a 3-wave structure, which is correct. However, wave B at the moment, this is an impulsive structure. So if I zoom in, then you can see this is 1, 2, 3, 4, 5. So in order to make wave B a legit wave B, we need a 3-wave structure, which means that this can be a zigzag. This can be an A followed by an expanding flat B, followed by another zigzag, taking the highs before a move down in C, right? So then we have an A in 3 waves. We have a zigzag B in 3 waves, followed by a 5-wave move to the downside in 5 waves, and that then being wave C. Now, how interesting is this? I was checking, I was thinking, I was calculating, I was like, yo, this would be really, really sick. Because what happens then is we get like, you know, a little bit more downside, go up, take the highs, then explosively go down. Then we take this low, because wave C needs to be lower than the low of A, and wave C needs to end somewhere in this box. So somewhere between 21.3 and 18, well, basically almost like 19K. So somewhere in this box, wave C needs to finish, and it kind of depends on the high of B in that case. So then we have people talking about, the impulse, it's finished, we're going to move down. Everyone bearish, everyone, okay, we're going to see new lows, la-di-la-di-la, because we took this low. And then what is the market going to do? In this scenario, the market is going to be like, yo, see you later. We're going to the upside. Just imagine how many people would first of all get wrecked by shorting here, the breakout shorters, right? Expecting lower lows, but also then expect how many people are going to be stopped out with the move up. And the moment we're going to take these highs, the high of B again, just imagine how many people are then going to buy before then over here, we're going to go down again. Man, it's going to be such a fuck up. So this scenario is, to me, very interesting. And this scenario, this ABC, is valid for the scenario that I show you now, as well as the ABC scenario, which I will highlight in a second just now. So this is why I think wave 4, so the green wave 4, right? And there we go. So let's check it. Wave 1, 2, 3, 4, 5. And then wave 5 will end in either the rare target area for wave 5, the common target for a wave 5. And also, again, these FIBs, by now you probably know the colors. Those are the, put on the levels, the 1.236 and the 1.38, which for me are very, like they are very good Fibonacci levels, and wave C tends to end somewhere between these levels, but the official target is all the way up to 31.2, like the common target. So between like 27.8 and 31.2 is the common target, and the rare target starts at 26K basically. So what this means on a higher time frame is that we would get something eventually like a move to the downside, a move to the upside, and then we go down for a wave 5. And it also means that the targets for a wave 5 are not as deep as with the scenario I showed you previously, the other scenario before this one, because now, because wave 4, this wave 4 over here is higher, so a higher price, some of these targets will be higher as well. So first of all, wave 4 is not finished, so this one has to go up. Just imagine it goes to the 1.38, like 29k. Then this is the area in between the 1.236 and the 1.618, very valid. Then we have the 1-to-1 over here, and I put the 1-to-1 from oh, by the way, this is the 1-to-1 of wave 1, and then put it on top of the wherever wave 4 is going to end. I just put it now at 27k, and then the 1-to-1 would actually be inside this area, so that's a double confluence for the end of a wave 5. And then the 0.618 is here, and this is again a trend-based fib extension from the beginning of 1 to the end of 3 to the high of 4, which in this case I put on 27.7k, which can get you over there. But if wave 4 is going to end up higher, you can see the higher I go, and it's still in the common area. If wave C, so wave 4, is going to end around like 30k, we have all 3 wave 5 targets ending over here in like connected to one another, which would be absolutely brilliant. And then if we also open the channel, it's going to be complete shebang, because then we have wave 1, 2, 3, 4, 5, and then the low of the channel again becomes a target for wave 5. So these are the 4 ways you can guess or basically try to calculate where the wave 5 will end. It's a little bit dependent of how long it takes for this wave 4 to end and how high it goes, of course, because as you can see, the channel and the target of wave 5 is changing massively with how I position the channel. But yeah, it's just a very interesting scenario that I wanted to share with you. And these are all the scenarios. And this scenario also includes that wave 4 is not yet finished. So this ABC might actually be my, so in order, right? This is my most preferred count. Then we have this one as my second most preferred count. Then this one is my, let's say, fourth or third most preferred count. And then we have the 2 more unlikely counts of this being ABC, and then eventually the most unlikely ABC, and then, you know, bear market finished all the way to the moon, 100k incoming. So just to get the ABC, with this scenario, the same applies. This being then a 1, 2, 3, 4, not yet finished, 5. Because for this scenario, we need to reach at least the 382 target, which happens to be at like 30k, which happens to be at this support resistance flip, which would be super interesting. So I am definitely looking for what price is going to do in the upcoming days, the upcoming weeks, of course. So this is still a 5-wave move. We still need some sort of like a 3-wave move for this to be a valid like A, B, and then a C. But it's just going to be so interesting if this actually works out. People are going to short here, but hey, we're going to buy. Then people are going to buy here, and this is where we're going to short to then the downside. Basically what I'm saying is my most preferred scenarios are going to be scenarios that are not yet finished with the bear market. We still have lower to go on the, well, in the months to come, basically. Maybe on the short-term time frame, yeah, we can go to 30k, would be absolutely brilliant. But then again, I would see price falling. So this is a long video, but hopefully I clarified for you some of these scenarios from Elliott Wave analysis, by using Elliott Wave analysis on the higher time frame. These are 5 scenarios that I shared with you on the higher time frame. I gave you the exact order of my preferred scenario up till the most unlikely scenario, and I hope this will help you with your plan in the longer term with trading or maybe investing in Bitcoin. Of course, everything I do is no financial advice. I don't know what price is going to do. You know, it's completely up to the market, but I've just shared some of my knowledge, my expectations by using Elliott Wave analysis with you tonight. That being said, I'd like to thank you for putting so much time in my channel, because this video is 35 minutes long. And I really value you watching this video. I'm really happy with reaching 70 subs. I just checked and I saw the 70, which is very nice. So thank you everyone for subbing. If you enjoyed this analysis and you want to have more, please sub to the channel, like this video, share it with your friends, whatever it is. But for now, I like to tell you, have a good evening, have a good morning, or have a good afternoon wherever you are in the world, and I hope to see you at the next video. Bye bye.